Welcome back to the Daily Crypto Deep Dive, the show where we take one big story from the crypto world and really slow it down, explain it in normal language, and talk about what it actually means for your portfolio. Today we're looking at a brand new name that a lot of people are already calling the new MicroStrategy, a company called 21 Capital, which is about to hit the New York Stock Exchange with billions of dollars worth of Bitcoin on its balance sheet. If you've listened to this show for any length of time, you'll know why that comparison matters. For years, MicroStrategy was the poster child for public company Bitcoin exposure. If you wanted to buy a stock that basically behaved like a highly leveraged Bitcoin bet, you bought MicroStrategy and hoped Michael Saylor was on the right side of history. Now we've got something similar but not identical. A company that's being built as a Bitcoin vehicle from day one, with a huge stack of BTC ready to go, heavy-hitting backers behind it, and its own ticker symbol waiting on the New York Stock Exchange. So in this episode, we're going to walk through who 21 Capital actually is, where this $4 billion Bitcoin stash comes from, why people are comparing it to MicroStrategy, what the important differences are, what the risks look like, and how you might think about it if you're already holding Bitcoin, Ethereum, Solana, XRP, or anything else in this space. We'll also talk about what this says about where we are in the cycle, because this is happening only a few weeks after one of the nastiest flushouts we've seen in a long time. This is not what you'd expect to see if the industry was dying. Let's start with the basics and keep it really simple. 21 Capital is a brand new Bitcoin-focused company that's coming to the New York Stock Exchange through a merger with a SPAC called Cantor Equity Partners. A SPAC is basically a blank check shell company that goes public first and then merges with a real business later. It's a way of taking a company public without doing the full traditional IPO process. In this case, Cantor Equity Partners went out and said, "We're going to find a Bitcoin-native business to merge with, and 21 Capital is that business." Once the merger closes, the new company will trade on the NYSE under the ticker XXI. On day one, it's expected to hold roughly 40,000+ Bitcoin on its balance sheet, which at current prices comes out to around $4 billion. Think of it like this. You're buying one share of stock, and that share represents a tiny slice of a giant Bitcoin treasury plus whatever operating businesses they build on top of that. They've even talked about introducing a Bitcoin per share metric so investors can see exactly how much BTC backs each share. Who's behind this thing? This is where it gets interesting. 21 Capital isn't just some small startup. It's a joint venture backed by Tether, Bitfinex, Cantor Fitzgerald, and SoftBank. Tether and Bitfinex are obviously massive names in the crypto world, and Cantor Fitzgerald is a huge, old-school Wall Street firm. Having those names on the cap table tells you this isn't a meme project or a quick cash grab. They're trying to build something that can sit in the same conversation as MicroStrategy, Marathon, Hut 8, and the other big Bitcoin-linked public names. So why are people instantly calling this the new MicroStrategy? It's mainly because of that enormous Bitcoin stash. Among publicly traded companies, this would immediately put 21 Capital near the very top of the list of corporate Bitcoin holders. You've got MicroStrategy right at the top, you've got major miners with big reserves, and now you're adding a freshly listed company with 40,000+ coins on day one. From a market structure point of view, that's a huge amount of supply that's taken off the open market and parked inside a corporate treasury. But there's a big difference in how they're approaching it. MicroStrategy started life as a business intelligence software company and then pivoted into being a Bitcoin holding machine. The Bitcoin strategy came later. 21 Capital, on the other hand, is being set up as a Bitcoin native operating company from the very beginning. It's not pretending to be something else and then secretly just buying Bitcoin. It's being sold to investors as a way to get exposure to Bitcoin through the stock market and as a platform that can build Bitcoin-related businesses on top. That Bitcoin native phrase matters. It means their board, their risk teams, their investor presentations, their legal structure. Everything is designed around the idea that their core asset is Bitcoin, and that volatility comes with the territory. The aim is to be a capital-efficient vehicle for accumulating BTC and building things like lending, custody, infrastructure, or services around it. MicroStrategy still has to pretend it's a software company that happens to love Bitcoin. 21 Capital can just be what it is from day one. Now let's talk about why this matters to you as a listener. First, it's another sign that despite all the drama, there is still serious money trying to build long-term Bitcoin plays inside traditional finance. We're not talking about a small company grabbing a few hundred coins. We're talking about a brand new public company starting life with tens of thousands of Bitcoin, backed by big names, and ringing the bell on the New York Stock Exchange. That is not the behavior of an industry that thinks it's going to zero. Second, it changes the menu for people who want exposure to Bitcoin, but either can't or don't want to hold the asset directly. If you're a pension fund, a conservative family office, or just someone whose broker makes it hard to buy spot BTC, you can now pick from several different vehicles: spot ETFs, MicroStrategy, miners, and now this new treasury-style company. Each one has a slightly different risk profile, but they all pull in capital from the traditional side of the market and route it into Bitcoin one way or another. Third, it adds another player to what you could call the digital asset treasury ecosystem. We've already seen that this model can be brutally painful in a bear market. When prices crash, the market can punish these companies even more harshly than Bitcoin itself, because you get a double squeeze. The underlying asset is down, and investors start to doubt whether management can survive the cycle. We've watched this happen with miners, with MicroStrategy at certain points, and with other Bitcoin-heavy firms that loaded up on debt. So bringing another $4 billion worth of Bitcoin into that world is a big statement of confidence, but it's also a big risk. On the upside, if Bitcoin continues to behave like a long-term appreciating asset over the next 5 to 10 years, then a company that starts life with a giant BTC stack has a huge head start. Every extra dollar they raise, every business line they build, and every efficiency they achieve can be layered on top of that core treasury. If you get a strong bull cycle, the equity can move even faster than the underlying Bitcoin, because investors start to price in not just the coins themselves, but the optionality of whatever the company can build with that war chest. There's also an argument that having a stock like this trading on the NYSE helps legitimize Bitcoin further. For a traditional investor, buying a share in a company like this is emotionally and practically easier than setting up a self-custody wallet, learning about seed phrases, and dealing with withdrawals and deposits. You might think that's lazy, but for a lot of institutions, it's just reality. If they can tick a compliance box that says this is a regulated US equity, they can move much more quickly. On the downside, there are several layers of risk that don't exist if you simply hold Bitcoin directly. You've got Bitcoin price risk, obviously. If BTC halves in price, the company's treasury is going to take a massive hit. But on top of that, you've got stock market risk. The share price can swing around based on things that have nothing to do with Bitcoin itself. Changes in interest rates, equity sentiment, short selling, or even rumors and headlines. Then you've got governance risk. You have to trust the board and the management team not to do something stupid with the treasury. Are they going to borrow heavily against the Bitcoin? Are they going to try and trade in and out of it? Are they going to issue new shares over and over again and dilute existing investors? MicroStrategy has built a certain level of trust with the market because people believe Michael Saylor will stick to his never sell philosophy. 21 Capital still has to earn that credibility. There's also regulatory risk. A company this visible, with this much Bitcoin, trading on one of the world's most important stock exchanges, will be under the microscope from regulators and policymakers. Any change in accounting rules, disclosure requirements, or capital treatment for digital assets on corporate balance sheets will hit them directly. That doesn't mean they shouldn't exist. It just means you need to understand you're not just betting on Bitcoin, you're betting on the legal and regulatory environment around corporate Bitcoin holdings. So how should someone listening to this think about 21 Capital? The first thing to say is, this isn't a recommendation to buy or sell anything. The point of this deep dive is to give you enough context so that if you see the ticker 21 flash across your screen next week, you know what you're looking at. If you're already holding spot Bitcoin in self-custody, this company doesn't replace that. It's a different kind of exposure. Self-custody BTC is the purest form of the asset. You own it directly, you control the keys, you're not relying on anyone else. A stock like this is more like a leveraged packaged play on Bitcoin plus management plus whatever business they build around it. If you're someone who only invests through traditional brokerage accounts and can't or won't go through the process of self-custody, then for you, 21 Capital sits alongside ETFs, miners, and MicroStrategy as another option. You might look at things like the Bitcoin per share ratio, the level of debt they carry, their operating cash flow, and how aggressively they're expanding. You might also compare their Bitcoin holdings to the total market cap of the company to see whether the stock is trading at a premium or a discount to the underlying coins. From a wider market perspective, the timing is almost as important as the company itself. This listing is happening right after a huge shakeout, where a lot of people called the end of the cycle. We saw leveraged positions blown out. We saw minor-linked stocks get hammered. We saw sentiment on social media flip from euphoria to despair in a matter of days. Yet, in the middle of that, you've got a brand new firm stepping up, saying, "We're going to list on the NYSE with a multi-billion-dollar Bitcoin treasury and build a long-term business around it." That tells you something about the conviction of the people behind it. Tether and Bitfinex don't need another project just for the sake of it. Cantor Fitzgerald doesn't lend its name and its credibility to something unless it thinks there's a serious business case. SoftBank doesn't get involved lightly either. They're all making a long-term bet that there is demand, not just this year, but for many years, for an equity-style vehicle that gives exposure to Bitcoin at scale. And that's where we'll leave it for today. As always, thank you so much for being here, for listening, and for pushing this show forward every single day. If you haven't already, please take 2 seconds, literally 2 seconds, to rate the show 5 stars on Spotify and drop the word "done" in the comments. It helps more than you realize, and it gets you into tomorrow's XRP giveaway as well. Make sure you're following the podcast so you never miss an update, because the next few weeks are shaping up to be massive across the entire crypto market. And if you've got thoughts on today's deep dive, drop them below. I'm reading every single one of them. Thanks again for spending your time with me today. Drop your thoughts in the comments, hit like, hit follow, and we will see you at the top.